So what's going on, y'all? It's been about a week or so since I've done a video, but in this video, I'm gonna discuss a template for creating your own trading plan. And basically, what this trading governance, what I like to call it, does is it defines specific rules and regulations and criteria for how you will approach the market, how you govern yourself in the markets, regardless of market condition. But before we get into the content, please make sure you share, like, subscribe, engage in comments, and I really appreciate it. Make sure you go over to chartsandpriceaction.com and check out my latest course offering with By the Hood University. God Charts and So Shall You, aka Charts and Price Action, aka Price Action and Practical Psychology. So it's a really good course that gives you um, a lot of depth on price action as well as some practical tips for how to govern yourself psychologically. So anyway, let's talk about trading governance. So there are a few main components that I use to construct my overall trading plan. The first part is the objective. So what are you even doing it for? What are you trading in the markets for? And a lot of us are in the markets just to be in the markets. Like we haven't really defined why we're doing what we're doing. Are you trying to generate income? Are you trying to build your long-term portfolio? Whatever your objective is for trading in the markets, put define that clearly in your trading plan. Another thing that I have under my objective section is how my options portfolio is allocated. So I'm not doing, I haven't made allowances for a ton of day trading in my portfolio allocation because it's just not really conducive to my lifestyle right now. I still work a 9 to 5, so I can't necessarily sit and watch charts, all day without distraction because of my, job. So also under that section, define how much you're going to pay yourself and how often. Are you going to pay yourself, $1,000 weekly or whatever? Me personally, it's a 65-35 split. So I will take 35% of the income, excuse me, the income generated in my portfolio, and the 65% that's left will be reinvested into other positions. And then what's the minimum account balance for your portfolio, if that's important to you. The second part of my trading plan template is my watch list criteria. So one thing that I did before is, since I've been on Thinkorswim for, several years, my watch lists have grown out of control, and there were a bunch of just useless watch lists taking up space. So what this did was it allowed me to clearly define my criteria for what tickers I would be watching. So what kind of narrative is guiding your portfolio? And that can change from day to day, from week to week, from month to month, from year to year. But you need to know what is guiding your portfolio. And that will help you in searching for, or whatever tickers qualify for your watch list. And do you have separate watch lists? So I have four, maybe five separate watch lists. And three of those watch lists are active watch lists in that they double as scanners. So the tickers for those watch lists will be changing on a day-to-day basis almost. And so it just depends on, certain criteria. Like, for example, so one of my watch lists is strictly earnings based. So I want to be able to swing companies that have earnings approaching. So I have a active watch list that it'll scan the S&P 500 and let me know. It'll filter out those companies that have earnings coming within a certain amount of time. So that's pretty much it with that. So the watch list criteria really allowed me to significantly reduce the number of watch lists that I had on my Thinkorswim platform. I mean, I had several. Like, I can't even count the number. Probably more than 30 different watch lists. And most of them I wasn't even looking at or checking for really ever. So it didn't make sense to have them. So it allowed me to um, clear my head and clear my space to allow for better opportunities. So um, that's just something to think about. You know, what qualifies a ticker for your watch list? And it could be something as simple as, hey, these are the X amount of stocks or tickers that I've chosen to watch on a regular basis. And it could just be that one watch list. And then the third part of your plan template should be your entry rules. So what signals are you looking for when entering a position? And not only that, what's the number of confirmations that you need to make that move? And so that part is important because there's a delicate balance between just being out there buck wild entering positions versus over analyzing. So for me personally, 2 to 3 confirmations is enough for me to take a position. So a confirmation may be something like, oh, maybe I got a bearish narrative today, like, oh, ticker XYZ bombed earnings they did terrible today, pre-market. And then maybe I look at the intraday chart and see that they're sitting at a supply zone. So that's 2 confirmations for me on the put side. And then maybe I have a high probability setup to the downside as well. Boom, 3 confirmations, I'm jumping in puts. You know, it's as simple as that. You have to have these defined rules so that you can better enable yourself to you can better train yourself to not even question it, because these are just the rules that I have, and as I put these rules into practice, I can make adjustments where adjustments are needed. So entry rules, and I have my entry rules broken down into what are my entry rules for my day trades, what are my entry rules for my swing trades, and then I have my swing trades further broken down into, swing trades that go beyond, 30, 45 days, leaps, uh, earnings swings, or short swings within, a 7-day time period. So I have it broken down into a few different sections there as well. And so again, the biggest part for me is that 2 to 3 confirmations, because I definitely am trying to kick the habit of over analyzing. And so what happens is I'll get to a point where I got so many confirmations that I've missed the move, and then when I finally get the confidence to jump in the position, I find myself jumping in at the wrong level. So another thing for me with my entry rules is defining where supply and demand is for that time period. So if it's a day trade, I'm looking at where supply and demand is for that day. And if a stock, for example, is in a supply zone, I am not buying calls. And what happens a lot of times is that us as retail traders, we're buying calls where institutions are shorting. And then we're buying puts where institutions are buying. So that's why supply and demand is so important. Whether you're day trading or swing trading, it doesn't matter. Those levels are important because you want to make sure you are moving with the institutions. You may not have institutional money, but you want to be thinking and trading like they do. So they are buying at demand and they are selling at supply. And what happens is retail traders are pretty much just liquidity for these institutions. Um, so yeah, that's just a little tidbit that I wanted to give you guys as far as my trading governance is concerned. And then the next part is your money management rules. And so this is all about positions that I'm in. How do I manage the positions that I've chosen to take? Am I uh, am I looking at any losers? If so, what kind of percentage? Let me go check the charts or check sentiment around this ticker. How do I feel about the success of this ticker as I continue to stay in it? Do I need to get out? Do I need to apply or employ some of my other rules, like my DCA rule? Do I need to hedge? Am I scaling into or out of a position? And if so, how am I doing that? And so, that's more so with the scaling in and out if I'm planning to get multiple contracts. You know what I'm saying? So if I'm planning to get 5 contracts in a position, I don't necessarily always want to go all in right at the beginning. You know what I'm saying? So I might, put on 2 contracts at first and then add a contract as the price continues to do whatever if uh if criteria is still met for me to allocate or add more risk to that position. I'm also thinking about or volatility with my money management rules, because volatility is going to dictate sentiment in the markets. It's going to dictate, how the markets are going to move. So I need to be at any given time. I need to be aware of what the sentiment is, and that has to be broader sentiment, so overall sentiment and sentiment on whatever tickers that I'm trading. Um, okay, and so then the next section is, what are my exit rules? So what is the rule or rules, if any, that tell you, okay, I'm gonna take profit on this position, or okay, I'm gonna cut out of this before I lose any more money. So for me, I have system generated targets. So I've developed a system where I can plug in some numbers and it'll tell me, as long as I'm on the right side of the trade, it'll tell me what premiums I could be looking at, as far as, where I could be getting out at. So options premium targets for those positions. So let's say I get in SPY 380 call at 50 cents. So I'll plug in some numbers and it'll give me multiple targets as I, change those numbers. So maybe it'll spit out a 75 cent target. Then maybe it'll spit out a 95% or 95-cent target. Then maybe it'll give me a 120. You know what I'm saying? So I'll have multiple multiple exit targets that are generated by my system that I can look at and refer to and say, okay, hit my first target. Let me go check the chart, see what's going on. Okay, I'm going to hold and see if it goes to my second target, and so on and so forth. So also for your exit rules, are you putting on trailing stops when you get to a certain profit percentage or whatever? Is there a change in the trend? Or your exit rules can be something as simple as, hey, I met my profit target, or hey, I met my price target as far as the stock is concerned. So there's no one right way to do it. So that's what it is with exit rules. And then the last part is routine. So what are you doing in the meantime? You got your objective defined, you got your watch list criteria defined, you know what narrative is guiding your portfolio. When you're doing your routines, you're assessing your portfolio performance. So basically, you're going through all of the sections of your trading plan template to assess your overall portfolio health. You're scanning the markets for any other watch list criteria. You're managing your portfolio. Do I need to take off some risk? Do I need to, you know what I'm saying? So that's the whole routines part of it, is it puts it all together. Um, so yeah, that's, like I said, your trading governance literally governs how you behave and how you carry yourself in these markets. And it should speak to your strengths, and it should help you to develop the areas that you may not be as strong. And I don't know about you guys, but for me, if I um, when I write things down, I tend to be more disciplined about them. So I have my objective clearly defined in my trading governance, and be very specific. You know what I'm saying? It doesn't matter how long, how many pages makes up your trading governance. Right now, I'm at almost 5 pages, and I'm pretty sure it'll get longer, but it literally tells me, okay, I'm looking at this watch list. Let me go to the chart. Okay, this is what's going on with the chart. Okay, let me go back to my trading governance, and based on what I'm looking at in the chart, this is the section that I need to pay attention to, because this section defines this type of trade that I'm considering for, or based on this price action. So that's really how it should work, and it shouldn't be based on any one ticker. That's what a trading plan is all about. It's based on the market as a whole and how you behave in that market. So share with me, any thoughts, or share with me in the comments, how you've constructed your trading plan, and some maybe some gems about your trading plan and how you have it mapped out, and whether you have it mapped out or not. So um, you may have a trading plan that's governed by whatever the current market sentiment is, maybe, or current market narrative, like, okay, uh, uh, increasing interest rates. You know what I'm saying? So maybe your entire watch list criteria is based around that narrative in, okay, who benefits and who doesn't benefit. How can I hedge? Yada, yada, yada. So very, very important thing to develop is your trading governance, and not just, oh, I developed it in my mind and it's in my mind. Write it down. Write it down, because you write it down, you're less likely to forget it, more likely to follow it, and become a better trader. So, again, if you have any questions, feel free to leave them in the comment section. Definitely, I'd love to hear you guys, or hear some things about uh, your trading plans, and maybe we can, share some ideas. But I'll catch you in the next video, and I appreciate you guys for watching.